Thank you very much, Shireen, for those lovely, warm words of welcome. And indeed, a pleasure again, I must add, to join together with the ICB to be hosting Ethical Finance ASEAN. There's been some fantastic conversations earlier today. And this panel, I'm particularly excited to be moderating as we look at current trends within the financial landscape. Specifically, we're looking at ASEAN and how the region is adapting to global economic shifts and sustainability challenges. We have two great experts with us on the for this panel. First of all, we have there's Yu Ishihara, who leads the MSCI's Research Singapore team and specializes in automobiles and associated components. Alongside you, we have Suraya Sani from Bank Negara Malaysia. Suraya is the Deputy Director of the Sustainability Unit. So big welcome to both of you, and thank you so much for making the time to join. Right, so let's get straight in to the nub of the matter. We have a number of questions we would love to unpack with both of you. And if I may just kick off with yourself, you. Um, from your perspective and the data and the insights that you have at MSCI, in terms of the economic outlook, you have we see that earlier in the day, Aries mentioned the increased kind of trade flows among ASEAN markets, talking about imported inflation and the impact of CBAMs as well. Can you share with us your perspectives on what are the kind of key sustainable finance trends you are seeing in the region?
Yeah, sure, Omar. Thanks very much for having me today. So I think when we talk about sustainable finance trends in the region, we can obviously have a pretty lengthy discussion, certainly about the critical role it plays in sort of the ASEAN region's economic development. But in terms of calling out, I guess, major trends, I'd certainly, highlight the growth of transition finance as, one of the key emerging themes. So I think it's fair to say that one of Southeast Asia's biggest challenges is sort of transitioning the high emitting sectors such as steel or chemicals, agriculture, and of course energy, while ensuring sort of economic and social stability and of course growth. And so to that end, we're seeing some, pretty big efforts in markets like Singapore and Malaysia, where, regulators are promoting frameworks, not just to fund clean energy solutions, but also sort of the incremental, decarbonization efforts. This is obviously, well tailored for the region, but it's also a shift away from some of the more rigid, I guess, call it green-only frameworks adopted by some of the Western markets. But again, it aligns much more closely with sort of the realities and economic development of Southeast Asia. But on the flip side of that, because there is this divergence with some of the other standards around the world, it's also kind of brought to light this issue that we're seeing in capital markets today, which still haven't fully come to terms with, defining, I guess, what exactly is a credible transition, especially in the eyes of a global investor, which kind of means that, ASEAN transition finance opportunities, they could face limited international demand unless, definitions, through areas such as sustainable finance taxonomies, which we're obviously seeing develop, or even things like improved disclosures, corporate disclosures through ISSB frameworks, ultimately improve transparency and, align more definitions. But kind of going back to that initial question about, how does this impact trade or inflation and how sustainable finance kind of plays a role here, I think one of the biggest takeaways is that the push to kind of develop a robust sustainable finance ecosystem in ASEAN, it's not, just, a nice social or environmental imperative, but it's also market driven, right? It's a response to these market dynamics, which is illustrated again by that earlier discussion around foreign investment into the region, or, the broader implications around, things like imported inflation or carbon border adjustment mechanisms. So transition finance, kind of defining what that is, what are the opportunities? It's going to be critical to driving capital allocation, which is, also related to directing foreign investment into Southeast Asia.
Thank you very much. It's fascinating those tension points we're seeing play out, and once again the taxonomy challenges underpinning that. I think it's some very fascinating insights there. And if I can also ask yourself, Soraya, turning to yourself around the kind of global regulatory trends and we were just touching there, you were just talking about taxonomy there and the issues that we'll have. But in terms of global regulatory trends effectively integrating into ASEAN's financial system, or is it these global frameworks, or is it more regionally tailored approaches that are needed when we talk about sustainability in ASEAN?
Thank you, Omar, and thank you for having me. So, the global regulatory trends are certainly influencing ASEAN's financial system, particularly in the areas like sustainability finance, digital finance, and AML, anti-money laundering measures. So, frameworks such as the IFRS sustainability standards and the
Mhm.
Task Force on Climate-Related Financial Disclosure, the TCFD, are gradually being adopted by the ASEAN countries. These actually reflect ASEAN's commitment to aligning with the international best practices. So, nevertheless, a regionally tailored approach is still essential to ensure that these global standards are implemented in a way that suits ASEAN diverse economies. The region, as you are aware, ASEAN comprises both developed and emerging economies, each with different levels of financial sector maturity, regulatory capacity, and economic priorities. So, a one size fits all model may not be effective, as some ASEAN member states may require time and flexibility to develop capacity, be it technical know how capacity or even financial capacity. So, you mentioned ASEAN taxonomy. So, that is actually a good example. The ASEAN taxonomy for accessible finance actually highlights the need for a harmonized yet flexible approach. The ASEAN taxonomy is really a case in point where it provides a common language across the different ASEAN member states while recognizing the differences in economic development and financial system maturity in the ASEAN countries. So by balancing global alignment with local adaptability, ASEAN can actually maintain financial stability and to some extent promote sustainable growth and enhance the region's attractiveness to global investors. At the same time, ensuring that regulatory transitions are manageable and inclusive.
Great. So I want to follow up on that. So we've got the kind of regulatory challenges that you've mentioned there. Sorry, and you've also touched on the taxonomy issues. Um, how how can we just get a bit more information around how do you deal with the tension points? So we get the tailoring that we talk about that you've referenced there, Soraya. Um, you want to be aligned to international best practices. Where are you seeing, just for the kind of viewers, what are the kind of tension points you're seeing, and any reflections just around a bit more, just to unpack that what you said there, sorry, a bit more around how that's being navigated.
So the tension point is really when developing countries are required to meet the gold standards currently being adopted by the developed countries. It's really not easy. So again, I go back to the example of the ASEAN taxonomy where we want it to be inclusive in nature. We introduce the transition taxonomy. So instead of just focusing on the gold international standard, we provide some flexibility. We introduce the transition categories, the amber categories, where users can actually start the journey slowly, but
Mm, mm.
eventually they will then achieve the green or the gold standards that we are looking for. So that is
Got you,
the
got you.
inclusive approach to some extent. Yeah.
Yeah, got you. So kind of more measured, phased approach
Fair
towards in the
approach.
same direction, but uh, appreciating where the starting point is different. No, excellent, thanks. And you, can I flip this round to bring in a bit of kind of, show me the money. Well, everyone's talking about growth, capital flows, etc. I mean, despite FDI declining around 10% globally, Southeast Asia attracted nearly $230 billion of inflows last year. Can it maintain this momentum? Can you give us a bit more color as to what's happening here, and is this sustainable?
Yeah, I think the word momentum is quite appropriate because I think, as you rightly point out, the fact that Southeast Asia is able to attract such a significant inflow of foreign investment, despite some of the challenges that Soraya just mentioned around, you know, transition versus sort of these green projects that are otherwise more popular, I guess, in the Western markets. The sheer volume of capital speaks to the potential for the capital markets' desire to finance transition opportunities in the region. And so I think currently all of the major Southeast Asian economies, they have a greater than 50% reliance on fossil fuels for electricity. And so to that extent, we've all seen, all of the major Southeast Asian markets making these national commitments, providing various degrees of supportive policy to provide tailwinds to cleaner energy, such as renewable energy. And so I think it goes without saying that renewables is obviously one of the key investment areas with regards to low carbon investment opportunities in ASEAN. But on the flip side, despite what I would say is, I guess, a pretty widespread recognition of this need for transition, I think growth for the sector so far has not, well, it certainly hasn't exceeded expectations. And I think that's quite fascinating because it also has some spill-on effects beyond looking at sort of the direct investment opportunities in things like low carbon power. There's an inherent importance in sort of decarbonizing energy in the context of growing Southeast Asia's importance as within the global supply chain for manufacturing. Increasingly, we're going to see Southeast Asian countries integrated into global supply chains for areas like transition minerals, industrial activities such as electric vehicle manufacturing. And these will all inevitably offer new opportunities for transition finance and exposure. So it's not so much about renewables as an industry to itself, but low carbon energy will play this incredibly important role in continuing to foster growth in other areas of the economy and transition as well, whether it's supporting manufacturing or mining, because global trade will become increasingly complex, again, due to factors like you mentioned before, like the carbon tariffs. So decarbonization of the ASEAN economies is imperative in, not only for the environmental sort of benefits, but also maintaining the region's attractiveness as a supply chain hub for global markets going forward.
And it's interesting you're touching on some reference points in the current kind of geopolitical scenario and the permacrisis and the deglobalization that we're seeing. It'd be remiss of me not to ask, with the kind of looming tariffs between the US and the China and the kind of spillover of that, how do you see some of that impacting what you've just said there specifically in this thematic of the transition finance impact and the decarbonizing of various industrial sectors for yourselves in the ASEAN region?
Yeah, I mean, again, I'm not a political analyst, so I'm not going to, talk about political views here, but I certainly think it is playing a significant role in sort of seeing more direct investment into the ASEAN region, whether it's, for diversification purposes away from sort of countries that may have, ramifications from tariffs from other regions. But again, I'd also point out that, carbon border adjustment mechanisms, essentially tariffs, these will also start to come into play if the ASEAN region is not able to decarbonize to meet it. The prices that ASEAN is able to offer will just become less competitive as well. And so I kind of come back to this whole idea of it's obviously great for the environment, it's great for society, it's imperative for growth as well.
Well said. No, very good point. And continuing on that kind of renewable energy perspective, Soraya, how is Bank Negara and its role facilitating financing for renewable energy projects in Malaysia specifically?
Thanks, Umar. That's a very good question. So Bank Negara plays a key role in facilitating green and climate finance, which include the financing for renewable energy projects through policy initiatives, funding programs, and regulatory frameworks that encourage sustainable finance. So just for information, Bank Negara Malaysia, we have introduced guidelines such as the climate change and principle-based taxonomy to help financial institutions assess and classify economic activities, whether it's green or transitioning activities. This includes RE-related projects or activities. This to some extent ensures that capital is actually directed towards projects with positive environmental impact. BNM, we have also introduced funding schemes such as the Low Carbon Transition Facility and the High Tech and Green Fund, which provides financing support to the SMEs, the group that requires most support to transition to greener practices and investing in green and renewable energy solutions. Additionally, in Malaysia, we do have the Joint Committee and the Joint Committee on Climate Change, the JC3. Through the JC3, Bank Negara collaborates with financial institutions, the financial sector industry to enhance access to green financing. BNM works closely with the government, including the ministries, to align policies and incentives that reduce financial risk for climate-related projects, which includes advocating for blended finance structures and risk-sharing mechanism to actually attract more private sector participation. We've embarked in several pilot projects, which include the greening value chain projects, pilot project. BNM also actively engages the financial institutions where we require them to strengthen their climate risk assessment capabilities and integrate accessibility into lending decisions. So through industry engagements and reporting frameworks, what we've seen is that financial institutions are encouraging and they are supporting their clients. So what we have encouraged FIs to do is to play a nurturing role for the businesses and households as well during this transition period. So we are actually creating an enabling environment for climate finance, including for the renewable energy sector, ensuring that Malaysia's transition to a low carbon economy is financially viable to some extent, scalable and sustainable. Yeah.
Yeah, great, fascinating. So I know yesterday at our SDG Hive session in KL, the financing the fair transition was discussed, and also the SME perspectives as well. And you mentioned the SMEs there, and they're a critical backbone of the economy in Malaysia. So I was wondering if you could expand a bit more around how is it that you find that, what are the type of peculiar challenges you see that the SME sector is trying to address when it comes to this question of adopting renewable energy? Is there anything particular there, or just broadly in their sustainability transition? I was just wondering if there's anything you could just add a small bit around that.
Yeah, so when we started this journey, I guess it was back in 2019 when we talked to the SMEs. I would say the main issue was awareness. There were lack of awareness. But now the SMEs, they are fully aware of the need to be greener and adopt sustainable practices.
Mhm.
But now is really the technical capacity, how to transition, as well as the, some of them are facing some cost constraint. These are some of the key challenges that SMEs are facing. But having said that, that's where the financial sector, financial institutions play a critical role to support the SMEs in their transition journey, to have the conversation and to actually start introducing what are the changes required is important. I mentioned earlier the Greening Value Chain Pilot Program. That program actually consists of technical capacity building, tools for SMEs to measure and report their emissions level, as well as financing for the SMEs to transition to greener and more sustainable practices. Yep.
Thanks, Ray. I appreciate you giving some more information around that. I know we're slightly off script on that, but you're absolutely right. The kind of market awareness, advocacy, the toolkits, the practical facilities, all of those are of critical use to SMEs, disproportionately more helpful to them than as they don't have bandwidth large multinationals will have. I want to pick up, I'm conscious we're rapidly running out of time. I'm very much enjoying this session, but there's a couple of things left I wanted to pick up with you. First of all, as everyone's been talking about good old AI and technology. And if I can ask the question to both of you, and starting with yourself, Hugh, what are the risks and opportunities of using AI-driven financial tools in emerging markets, particularly in regards to financial inclusion and climate finance?
Yeah, of course. This one's, I guess, particularly poignant for us at MSCI, given our sort of company's core ethos is to leverage technology and data to help, financial performance. And so to that end, AI has been a key technology to enhance our own company's value proposition for a while now. So I'm more inclined to talk about the opportunities here. So obviously we can start with an area where we devote a lot of our development resources, which is developing better models for measuring climate or transition risk using AI to better assess sustainability data, assess financially material risks, and ultimately this is all in the goal of promoting better capital allocation and decision making. But to your point and question, even extending beyond sort of capital markets, there's clearly opportunities for AI to drive more financial inclusion. So thinking along the lines of improving modeling credit using alternative data to extend credit to those in need, or just lowering transaction costs to make financial services more accessible to a wider range of individuals or SMEs. But I think in general, we're clearly approaching a tipping point with proliferation of AI technology. And so I can imagine there will be new innovative ways to use AI to further enhance sustainable finance or financial inclusion. But there are risks, as with most nascent technologies. whether it's biases in data, models, data security concerns, and of course even regulatory gaps that could be used to exploit certain segments of the population. But I personally think that this is a situation where if there's sort of a collaborative effort, between financial institutions, but also the technology providers, and of course the governments, the potential, opportunities for AI to promote, financial inclusion or broader sustainable finance, is going to outweigh the risks.
Mm. Can I just kind of ask a bit further on one thing? So obviously with MSCI in your leading position as a kind of data provider on that side of the business, what's the one thing that's really excited you from the things that you've just mentioned, or is there anything that's really jumped out to you in the last kind of 12 months that you've seen AI do from your existing product set that you have at MSCI and say, wow, now that's a really fascinating application, how maybe how one of your clients are using it or how it's tweaked or enhanced a particular existing offering?
Yeah, I mean, I'm not going to give away all my trade secrets here on this particular panel, but it's playing a huge role in everything we do, right?
Mhm.
And it can be something as simple as data collection, but even more
Mm.
importantly, it helps enhance our models to better portray whatever it is we're looking at, whether it's financial risks associated with physical risk or whether it's assessing alignment of certain activities and certain company profiles with different exposures. And so I think it's honestly limitless in terms of our ability to provide better, solutions for our clients and provide just better transparency for the market. And so, I think
Excellent.
we're working to incorporate it in as many aspects as we can, but at the same time, we're obviously very conscious of making sure that we're managing the risks appropriately, that we're not being completely black box about what we're doing here. And so, I think it's a balance, but I'm certainly of the opinion that it's going to do more benefits for us, which will obviously mean hopefully more benefits for capital markets in general.
Excellent. Oh, great. And Soraya, same question to yourself. As a regulator, big debate on regulating AI and restricting it and so on. But how do you see the kind of risks and opportunities?
Yeah, I agree with what you mentioned earlier. So just want to add one more point on the opportunities where AI can enable the creation of tailored financial products that meet the specific needs of diverse customer segments. So this is really important in serving
Mm.
the various segments in the economy. But one flip side is that AI often involves collecting and processing large amounts of personal data. This actually raises concern
Mhm.
around privacy and data security, particularly in
Yeah.
regions with weaker data protection laws. Yeah.
No, absolutely, it's a fair point. So I'm very conscious of where the counter is rapidly running out. So if I can ask one kind of closing question to you both. For us at GEFI, we curate these conversations as practitioners to really help catalyze positive action and momentum in markets. So if there was one key action that you feel is needed to ensure that Southeast Asia's financial growth is both inclusive and sustainable, as we've been discussing on this panel, what would you say is that one key thing that you would personally like to see? So, Soraya, maybe if I can start with yourself.
Yeah, my point is simple. There's a need to establish a cohesive and regionally aligned policy framework for sustainable finance. So, well-structured policy ecosystem is really crucial to mobilize capital and ensuring financial stability, as well as promoting inclusive economic growth.
Absolutely. So cohesive, unified standards. You from your end.
Yeah, I mean, it's well put, right? I would echo that and maybe expand on it. I think it's a focus by all stakeholders, right? It's the capital markets but also private and public sector to make sure that capital is delivered efficiently through sustainable finance or transition finance. And Southeast Asian markets then need to define and identify a structured pathway to finance these shifts. And not only is that going to drive regional decarbonization, but also promote economic growth, which is obviously good for society in general. And ultimately, again, we're talking about competitive growth for the ASEAN region.
Great. No, thanks so much. So look, sorry, a huge thank you to both of you for giving your times for this kind of short, somewhat rapid fire panel. excellent insights and very honest reflections as well, and I think very pertinent to the practical realities of the financial markets. Cohesive, unified, and collaborative are definitely three key messages I'll be taking from that panel. So a huge thank you to you both once again. And all that's left for me to do is now return back to yourself, Shireen. So back over to you. Thank you very much.